These are S&P 500 stocks that have 50-day moving averages about to break above their respective 200-day averages. That's a bullish momentum signal for these names. With all these strong technical signals, we thought we could use a little technical support, so we're going to bring in Dan Fitzpatrick. He is founder and chief market analyst with StockMarketMentor.com. Hope I got it right there. Dan, welcome. Good to have you in-house with us. Let's start with one of these stocks, BALL Corp. A lot of us are familiar with what BALL Corp does. We're not so familiar with the chart.
Yeah, well, it's interesting on this one. You can see what I call the gap and crap pattern here.
Gap and crap.
The gap and crap,
okay,
or the jump and dump.
Okay.
What they did was they reported earnings that were, let's just say, they said, well, we expect it to be really, really bad, but instead it was just really bad. How do you like us? And so the stock ran up, and then it fell back down to like a 17% decline. There we go.
So it went up and then it gave back everything.
Yeah, and so what that means is folks are looking at the earnings and they're going, oh, that's great. They buy the stock and then they turn around and they sell the stock back down because they realize, well, that was a mistake. So this is a stock that's really still under distribution. Even though the 50 and the 200-day are trending sideways, that's not really a bullish signal. It just means that the stock's kind of dead.
So as a general precept or principle here, gap and crap is to be avoided, right?
Yes, that's a technical term that I just made up.
Good. All right.
Let's see how it applies. So that's a sell for you, Ball is. What about Sherwin-Williams? You feel better about this one?
Sherwin-Williams is it's funny that the technicals are about the same. But the chart is very, very different. Here, you've got this inverse head and shoulders, which I'm highlighting in yellow. So you've got the inverse head and shoulders, which signifies a reversal pattern from this prevailing downtrend. And then over the last several weeks, the stock actually consolidated and drifted sideways to where the volatility gets really, really low, and then finally it exploded. Now, this is the exact opposite. We've got, again, 50 and 200-day moving average crossovers, but in this one, the stock jumps out and it doesn't pull back. So this is just kind of a gap and, well, here I am. How do you like me? So I think this is a stock that's probably going higher, definitely longer term as a trader. Maybe you want to wait a couple days and see if it pulls back, but I like this as much as I don't like BALL.
And it's that little tail of white that we see there on the screen is the telltale, right?
That's right. Yeah, just this little thing
That little thing right there that you erased. Or you just drew over.
Well, I do
get
tend
it.
to
There
do
it
that.
is. Yeah, it's that little squiggle there.
This little thing right there. Yes.
I got it. All right, let's move on to CarMax. And this one you're bullish on as well. Explain why. Yeah,
so CarMax actually looks, again, pretty similar with the 50 and the 200-day crossover. And here, again, the fundamentals are just kind of so-so. They're not that great. And when you think about it, particularly with the used car market, which is what these guys do, their margins are super, super skinny. Car prices are getting up, and I think it's a little bit like homes, where people are not selling their homes because they can't afford the new ones. Same thing here. So this had a nice breakout right from the 50 and the 200 crossover. And again, it's moving higher, and you can see the volume. The volume's also going higher as well. So this is a stock that's under accumulation. Frankly, I think the industry's a really bad one to be in, but when things look the worst, a lot of times that's when stocks start to run. So I think that's going to happen as well. CarMax and Sherwin-Williams, I would say, are stocks that you want to buy if you're patient and want them for a long-term hold.
What are those volume spikes that I see there in January 23, June 23?
Sure. Well, these are basically, it's the stock's response to earnings.
Earnings, yeah.
And that's a really good question, because when it doesn't matter what earnings really are. If earnings are really bad, but they're less bad, you'll see that because the stock will jump. People say, oh, it's not that bad, I got to buy the stock. On the other hand, if earnings are really good, but the stock jumps and then sells off, well, then it really just tells you what the market is expecting. And so you've got to pay attention not just to what the stock does in response to earnings, but what it does afterwards. You look at the follow-through. If the stock follows through, the move is real. If the stock doesn't follow through and it reverses, well, that's the gap in crap again.
You made it very clear and colorful. Dan Fitzpatrick, thank you.
Hey, thanks a lot, Tyler.
You got it,
Appreciate
my friend.
it.